Hello, everyone. Thank you for joining us today on the special Saturday edition, and welcome to this educational presentation where today I want to talk to you about two things that you can do to immediately, and when I say immediately, I really mean immediately, start to improve your trading. These are two edges that will really increase your odds for success, and it doesn't matter what strategy, what time frame, or what market you trade, you can apply them to your current method. You can devise a method based off of these two edges, or you can actually trade the technique that I'm going to be sharing with you today. For example, let's take a look at this chart real quickly, all right? Here's an older chart, well, just about a month or so in GME. We've all seen that GME's been in the news lately. A lot of internet interest and things going off, made off internet announcements. But looking just a month ago at this stock really didn't appear to be doing anything special. In fact, if someone were just to look at this before the announcement came out, they would have said there's no direction in this market at all, just kind of drifting up a little higher, but nothing of interest. Well, with the two edges I'm going to be sharing with you today, you would have known just simply by looking at this chart. With the first edge, you would have known the overall trend was up. And then once you applied the second edge, you would have known that the short-term trend was up. So when you apply these two edges together, the overall trend and the short-term trend, just by looking at the face value of this chart right here, you would have had a valuable synergy for success, a high probability edge here that the market was about to move up rather strongly. And then we all know what happened. In the following days, the market shot up 47 points from a roughly $15, $20 stock all the way up to in the 60s. Now that went off some announcement that someone made over the internet, but you would have known this in advance. So this is what we're going to be sharing with you and teaching you today and revealing these two things that you can do to immediately improve your trading. And remember, they are extremely, extremely simple. And we make it even more simple by having them one click away on the PTS Primo charting platform. This is the educational platform I developed with ProTrader strategies that actually teaches traders how to trade. So once again, welcome to this special Saturday edition of our educational webinars. My name is Steven Primo. I am the president and founder of Specialist Trading. I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Now, specialist is just simply someone that made markets. So if you ever wanted to buy or sell a particular equity, the floor broker would take your order over the phone in those days. They didn't have any internet, and he would walk up to the trader who specialized in making a market in that particular equity. So I made markets in stocks like IBM, Waste Management, and I traded and made markets through the crash of 87 and the bull market that followed. In the mid-90s, I left the floor to manage money and to trade my own personal account. And roughly about 15 years ago, I teamed up with ProTrader Strategies with one goal in mind, and that was simply to educate traders around the world. And I'm happy to say we have students now in over 110 countries around the world and in virtually every state. So what we've done is I've accumulated all these things that have high levels of consistency. Techniques, tips, strategies. And what we've done is we've formulated an educational company to teach you these things with the ultimate goal of putting the power back in your hands. And you'll see that in detail in today's educational presentation. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying these two edges to your trading, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, another way to get more education on a daily basis, so you don't have to wait for these weekly webinars, is to simply follow us on Twitter or X, however you'd like to call it. There's our handle right there, abbreviation for Specialist Trading. I would recommend copying that down because every day I post anywhere from 5 to 7 different snapshots of signals that our methods or strategies have generated. And I give a little bit of analysis as to why they were generated to show you just the consistency in our methods. I also post bits of financial wisdom. So there's lots of great free education on a daily basis. Please feel free to follow us on Twitter. Now, as I stated in the opening statements, we are first and foremost an educational company. We give these educational webinars on a weekly basis. Now, what does that mean? Well, first of all, I'll tell you what it doesn't mean. It doesn't mean that you're going to come here today and I'm going to tell you what I think the market's going to do. Is it going to top out? Is it going to keep going higher? Is it going to go sideways? It doesn't mean that I'm going to tell you what the best stock is to buy so that you know what you should be purchasing or selling. And it doesn't mean that I'm going to tell you what the perfect time frame is to trade. You see, those are all things you have to decide. For some reason, the entire industry has been based on us simply blindly following someone and say, well, listen, they must know what to do. They've got a lot more experience, a lot more money than I have, so I'll just do what they do. But that is probably a recipe for a disaster bigger than anything I've ever seen, because if that works so well, once again, the entire industry is based on that, then why do 80 to 85% of all traders fail? And usually within the first year. It's because that really doesn't work at all. So the real secret to being a consistent trader is to gather this information, is to have someone teach you, but then for you to decide on your own what you want to buy, what you want to sell. You see, that's, in my 47 years, is the only thing I've seen that makes a trader consistent. So my goal is simply to teach you how to trade, especially with the specialist edge. Okay, so before we begin, real quick, as the sign says here, a few announcements. We have a good crowd here today, but I want to make sure that everyone is able to follow the presentation. So if you have a question, please wait till the very end to ask any questions. I promise I will get to them at the very end. I even see at this point right now, some people are raising their hand. They have questions to ask, but please, if you have a question, just wait till the end. I promise I will get to them. The only question I will answer is the most common one, and that is this being recorded? Yes, it is. So if you have to leave early, or if you're having technical issues, maybe it's your internet connection. Oftentimes, if you log off and then log back on to Zoom, you will be able to visually have a better picture of this presentation or hear me more clearly. But if you're still having difficulty, don't worry. Each and every one of you will be sent a link to this recording so you can watch it over and over again at your own leisure, okay? So once again, we have a good crowd here today. Don't want to stop at every slide. So if you have a question, please wait till the end. I promise I'll get to all the questions at the very end. Okay, with that stated, let's begin today's educational presentation. And I'd like to start off with something that my mentors taught me, what I learned trading on the floor of the exchange some nearly 5 decades ago. And firstly, I'd like to explain, I know a lot of people think that, well, Steve, that's why you've been trading so long, because your experience started on the trading floor and you had access to advanced information. And that's why you were born with a silver spoon in your mouth. You could trade and you had a license to steal on the trading floor. Well, that's not true at all. In fact, in my 15 years of teaching with ProTrader strategies and specialist trading, I've made no secret about my first year or two on the floor that I couldn't make a dime. I was basically just trading water. Now, sure, every once in a while, I'd have a good trade or a good month, but then I would quickly give it all back, right? And I'm sure you all know what that's like, right? It's very discouraging, very frustrating, because you're working very hard. You're studying a lot of different techniques and methods. And guess what? It's all being put to not very good use because you're not making anything. You're not seeing any positive results. So that's what I went through my first nearly 2 years of trading. I was lucky enough to have some mentors. These were specialists that were on the floor of the exchange, and they saw how much I was struggling. They saw how frustrated I was. And I remember this is one of the first things they taught me. Now, remember, I was learning the exact same things that probably most of you have been taught. Listen to all the news, wait for the earnings to come out. Watch the jobless claims, okay? Listen to economic reports. We didn't have internet then, so we didn't have trading rooms or chat rooms, but we did have newsletters. So I was subscribing to all the newsletters, and my trading was tremendously overcomplicated. And here's what they said. They said, Steve, overthinking is what kills your trading. I thought to myself, overthinking, but I'm doing everything that I've been taught. Well, how is that overthinking? And they ultimately said the market tells you everything you need to know. Now, this concept was entirely foreign to me. What do you mean the market tells me everything? I thought that guy on TV, after the market closes, is supposed to tell me everything I need to know. Or I thought the earnings reports were supposed to tell me everything I need to know. Or I thought support and resistance was supposed to tell me everything I need to know. But they said basically that those things were what they called as useless noise, that they only stood in the way of my success. I was overthinking and overcomplicating everything. I had maybe 20 or 30 indicators on my screen. I was following a ton of markets, which I was required to do, but it was just really complicated trying to apply all these things to roughly about 60 stocks. And I wasn't listening to the main thing, actually the very source of my trading. That was the chart in front of me. That's the market. But I really didn't take any of this advice. And so for the next month or two, I said, okay, sure, sounds great, but that's right. And I continued to trade the way I'd been taught, and I continued to lose money. So ultimately, I came back to them. I said, okay, what do you mean by the market tells you everything you need to know? So this is what I'm going to be teaching you today. There's nothing you have to purchase. It's entirely free, and you'll see how this can greatly improve your trading. All right, so let's talk about the first edge my mentors taught me. Remember, all of this is extremely, extremely simple. In fact, you may look at this and say, this is too easy. Well, how can this make me any money, or how can I be successful? Well, remember, it's often the simple things that work the best, not the complicated ones. So edge number one, if price is above the 50-period simple moving average, the overall trend is up. That's it. You don't need to look at two different time frames. You don't need to look at support and resistance. You don't need to look at patterns, higher highs, higher lows. That's it. If price is above the 50, the overall trend is up. And conversely, if price is below the 50-period moving average, the overall trend is down. So why is this so important? So why do we need to know the overall trend? Because that's the first thing we teach our students. Once you know the overall trend, you will only trade in sync with that overall trend. In other words, if the overall trend is up, you will not look to go short the market or sell short to buy puts, anything of that nature. And conversely, if the overall trend is down, you will not look to buy anything. I don't care how much someone is telling you online that this is the lowest it's been in 20 years, how price is tremendously oversold. You will never buy anything. Why is this so important? Because we're trying to give you an edge. We're trying to put some odds in your favor. And if you do this over time, you will put the odds in your favor. Let me share with you what I mean here. Let's look at a generic chart. And we specifically made this generic because we didn't want you to think, well, this works better for stocks or this works better for currency pairs. It makes no difference. And it makes no difference what time frame. As we look at this chart, most traders would say, well, there's really no trend here. In fact, it's kind of going down, back up, back down. So I really don't have any idea what the trend is, so I'll stay away from this. That's not true. The first thing we teach our students is to apply the 50-period moving average. And then we tell them to ask themselves, where is price in relation to that 50-period moving average? And as you can see, price is above. So if price is above, what is the market telling you? Not me, not some guy in a webinar, not some guy on TV, not some earnings report. What is the market telling you? It's telling you the overall trend is up. That means we will only look at this from a buyer's perspective. We will only have a buyer's bias. Now, this is not a strategy. It's not a system. It doesn't mean to simply buy at the market. It just tells you the overall trend. Now you know what side of the fence to be on. You will have a higher probability for success being in sync with the overall trend. Same with this generic chart, okay? Most traders would say, well, I have no idea. There's no trend here at all, okay? That's not true, because once you apply the 50-period moving average, you ask yourself, where is price in relation to that 50-period moving average? Well, it's below. So not some earnings report, not some oversold indicator, overbought indicator, but the market is telling you that the overall trend is down. This is your first lesson in learning how to listen to the market and not an outside source. So we know that we will have a higher probability for a consistent trade if we are in sync with the overall trend. And if you don't believe how powerful this simple edge is, go back and look at your last 10 or 20 trades. I can almost guarantee you that the losses you had were because you were out of sync with the simple edge, the simple first edge. That means you were probably buying below the 50-period moving average and probably selling above the 50-period moving average. Now, don't get me wrong. There may, over time, be some great buy setups below the 50 and some great shorting setups above the 50. But remember, this is an edge. It's a numbers game. If you do this over time, the way I did my first 2 years of trading, you'll most likely give it all back, and you'll, at the very best, just be treading water. Think of not using this as the same thing as playing the slot machines in Las Vegas. Sure, every once in a while, even though they have the worst odds for any gambling capacity in Vegas, over time, sure, you will see a winner every once in a while, and the lights will go off, and you'll feel good about yourself. You'll say, hey, gosh, this is pretty good. I just had a small little jackpot. But they're designed to have you stay there because they know if you stay there long enough, you're going to give it all back. It's the same concept with buying below the 50 and selling above the 50. Sure, every once in a while, you may have some good winners. But if you do it long enough, you'll give it all back. Take it from someone who's done it 47 years ago and didn't have any success. And take it from someone whose trading started to turn around once they started to apply this simple edge. Okay, edge number one. Let's go on to edge number two. When a bar closes in the top 25% of its range, the market, not some guy on TV, not some guy in a webinar on Saturday morning, but the market is saying, I want to go higher on the short term. Conversely, when a bar closes in the bottom 25% of its range, the market is saying, I want to go lower on the short term. All right, so what does this mean? A lot of people get confused by top, bottom 25%. Well, let's once again take a look at this generic bar here. Doesn't matter if this was a monthly chart of crypto or a tick chart of the E-mini futures. Makes absolutely no difference. But what you want to do is divide by 4 separate but equal parts. And if you close in this top quarter right here, this top 25%, what is the market telling you? It's saying, I want to go higher on the short term. All right. So what if we can combine this short-term edge with the overall edge? Well, let's see what happens. Let's go back to that chart again. Remember, the overall trend is up. So now let's see the short-term trend. Well, we have a bar here closing in the top 25%. And look what happened. For the next 6 bars, it went up. Now, here's where students get confused. They say, yeah, Steve, but if I had sold there to go short or bought the puts, look, I had a really nice down day. Well, sure. Just like I told you, just like the slot machines, every once in a while, you have a really nice trade. But look what happened immediately after that one bar. Another bar closing in the top 25%. And just bars later, we're making brand new highs. So how well would that have helped you? You would have had to be very quick and get out. And, how do you know you're not going to give it back on the next setup? You have a much simpler way to trade. You're more in sync with the overall in the short term if you only look for these two things to be in sync. Now, it works the same way with the downside. Once again, here's a generic chart. Makes no difference what market, what time frame. What you want to do is divide by 4 separate but equal parts. And if you close in that bottom quarter, that bottom 25%, what is the market telling you? Not me, not some guy on TV. What is the market telling you? It's telling you, I want to go short, lower on the short term. All right. So when we combine this with the overall trend, we have a high probability for success. Once again, the overall trend is down in this generic chart, so we're not going to even consider buying. And someone would say, but yes, Steve, look, you could have bought here and you would have had a nice profit. Sure. But wouldn't it be better if you saw that this bar closed in the bottom 25% and you went short? You see how we have a higher level of consistency by simply applying these two tools, these two edges. Now, remember, this is yours right now. You can start immediately applying these to any strategy you have. You can build your own strategy based off them. But here's the best thing. I'm going to share with you right now a technique that applies both of these edges that you can use and go back and research and see how powerful it is, or start using it this Monday. All right. This is a technique that uses the overall and the short-term trend. We just have to edit a few things in order to highlight and really place a spotlight on these high probability points of entry. All right. So this is yours, this trading technique. We always like to give something away for free so you can start using, so you can see the value in our education, that we're really trying to educate you to take your trading to the next level. All right. Here are the setup rules for this trading technique. Let's look at this older chart in HBQ. It's only going back a month, but it's older in our terms because we like to look at things that just happened recently. But this is Hewlett-Packard, okay? Once again, this is kind of slowly drifting higher, but we don't have a real clear-cut idea of what's going on. Now, we don't follow any news events or anything fundamentally at specialist trading. So you can't say that, well, Steve, there's a negative impact coming out with the earnings or whatever, because we don't even look at that. In fact, I stopped looking at news over 4 decades ago. So if I'm living proof that I'm still here trading without looking at news, then sure, you can let go of that umbilical cord as well. But if you want to look at news, it's entirely okay. It's up to you. But none of fundamental news or news events or announcements are incorporated in any of our techniques or methods. All right, so we look at this. The first thing we tell our students is to always apply the 50-period moving average. Now, initially, price was below, so the overall trend was down. Now, here's what we want to do with edge number 2. We want to see bars either closing in the top or bottom 25%. We don't really care, but they have to be either intersecting that 50-period moving average or very close to it. That's it. It doesn't matter if they close in the top or bottom. We don't care. We're listening to the market, remember? We would only care if we were trying to impose our will on the market and say, well, you've got to go higher because the earnings were good, or you've got to go lower because the economic report was bad. We don't care about that. We just listen to the market and it tells us what it wants to do. So here's how simple it is on our platform. On the PTS Primo charting platform, which I developed with ProTrader strategies to make trading simple, simply come up to the top bottom 25% tab right here and click it on, and you'll see bars that close in the top or bottom 25%. If you have a green arrow that we have here, that meant it closed in the top 25%. If you see a red arrow, it means that it closed in the bottom. And what do we have here? We have 2 bars that one closed either intersecting or very close to that 50-period moving average. So what's this telling us? Well, these are all the requirements needed for this technique, but it's saying that the market wants to go higher. In fact, there's a high probability that there's going to be a big move to the upside. And someone looking and say, how can you tell just by looking at this? But that's how simple the market works. See, we overcomplicate things. Remember, just the way my mentors taught me, overthinking is what kills your trading. If you listen to the market, it tells you just about everything you need to know. So look what happened. All based just off these 2 edges that I just shared with you today. Okay, that's the simplicity of this technique. Let's look at some more recent technique examples, okay? And you'll see it happening over and over again. And once you get a clear idea of what to look for, well, you can start researching this on your own and applying it to your own strategy and say, wow, if I would have known this, I could have gotten in a lot earlier, or wow, if I had known this, I would have never taken the trade because it turned into a loss. And remember, everything you're seeing is displayed coming from the PTS Primo charting platform that actually teaches traders how to trade. All right, so let's look at this example here in PATH, P-A-T-H. This was going back a couple of months. Most traders looking at this would say, well, Steve, you know, I'm a student of technical analysis. This is making a nice base here. Look how we bounced off there, came back, bounced again. So I really like this. And that guy in that chat room says we're building a base. So I'm a buyer. I'm listening to the market, right? Oh, not really, because the first thing we tell our students is forget about basing patterns, forget about bottomings. We're just looking at where a price is in relation to the 50. Now, price is originally below, going back up, going below. So we don't have a clear-cut idea because it's kind of oscillating above and below. This is where edge number 2 helps us. Remember, we're looking for bars that are either intersecting or close to the 50-period moving average, and that either close in the top or bottom 25%. So all we do on the platform is click on top, bottom 25%, and we can see them automatically displayed. And what do we have here? We have 4 bars that closed in the bottom 25% that are either intersecting the 50-period moving average or very close to it. So this is the market telling us it wants to go lower. And someone would say, but yeah, but that guy in that chat room says that there's a bottom right here. We're making a base. We don't care. We're not listening to outside sources. We're learning how to listen to the market. And look what happens. Okay? See how simple this is? All without the advent of news, not overcomplicating things, tons of indicators the way I used to. We're learning how to listen to the market. Here's another example in GME that we started out the presentation with. Okay, GameStop, basically just a month ago, was pretty much directionless. It wasn't doing anything, slowly drifting, but really not giving us enough idea of what it really wanted to do. How could this technique have helped us? First thing we do is apply the 50-period moving average. And we see that the overall trend was initially down, but at this point it started to close above. So now we know that we should only be viewing this from a buyer's perspective. But what is the short-term trend telling us? Well, we click on the top bottom 25%, and we see here that we have 2 bars right here, the very first 2 trading days, or I should say the second or third trading days of May, telling us that they intersected the 50-period moving average and they both closed in the top 25%. So this is the market telling us, way before any internet meme announcement was made, way before something came out on Reddit or something or whatever. Once again, we don't follow you, so I have no idea. But way before any announcement came out, the market was giving you a clue saying, I want to go higher. Most likely there's going to be a pretty big, strong move to the upside. And then look what happened just weeks later, up 47 points. So it went roughly from a $15, $20 stock up to a $60, $65 stock. You think you could have done well just learning how to listen to the market? Let's look at this example in Dash, all right? I had a student that said, well, Steve, before coming to specialist trading, I was really into support and resistance. In fact, I took that $10,000 course where they had a program that told you exactly where the institutions were buying and selling. And you've got to always follow the institutions, right? Because they're the big money. If they're going to be buyers, they're going to have enough money to move the market. So you want to be on the side of the institutions, right? The big banks. Well, let me just tell you personal experience. Remember, as a specialist, I used to make markets in roughly about 50 or 60 stocks. And I used to trade with a variety of different banks and brokerage houses. And the institutions, the ones with the big money, in my opinion, my personal experience, had the worst trading experience and the worst track record of any other institution I ever traded with, more than other banks, more than brokerage houses. So I would never trust anything what an institution is doing, whether some $10,000 program that tells me what they're doing. Okay, but it's up to you. But this student said, hey, looking at this chart, there was institutional support because it was holding right there. So basically, you wanted to be a buyer, right? And I said, not really. I said, here's a simple technique. Apply the 50-period moving average. And we see here that the majority of bars are closing below. Sure, we have a couple that close above, but they go right back below. So that's giving us a clue that most of the bias is to the downside. But then we apply edge number 2, and all we're interested in is seeing a price bar close in the top, bottom, or 25%. We don't care which direction. And we see that it's either intersecting the 50-period moving average or extremely close to it. So let's see what happened when we apply the top, bottom, 25%. Well, we had a total of 4. 1, 2, 3, 4. Now, this one closed in the top 25%. This one closed in the bottom, and so did these. So when our students see examples like this, even though nothing has happened yet, they say, well, Steve, what do I do? I'm not sure, Always follow the majority. If you see more sells than a buy setup, than a buy top 25%, then take the sell bias. And conversely, do the opposite if you saw more closing in the top 25%. So even though nothing much has happened here, the market's telling us it wants to go lower. And look what happened the next day. Gap down roughly about 20 points. Let's take a look at BURL, okay, Burlington. Now, once again, price was below the 50, so the overall trend was down. Now we have 3 bars above the 50, closing above. That's all you need. But in order to apply this technique, we want to see bars that closed in the top or bottom 25% and that are intersecting the 50. Now, what do we have here? Once we click on the top bottom indicator, guess what? We have 2 bars intersecting and closing in the top 25. So BURL is telling us, I want to go higher. And someone could say, yeah, but for the last 3 days, it's done nothing. It's gone sideways. Why would it want to go higher? Well, obviously, some news announcement or something came out the very next day. It gapped up 45 points. Now, isn't it funny how this is not based on any news at all? We don't take that into account at all. It's not a requirement. So how did we know to have a buyer's bias? Because the market tells you just about everything you need to know. You see, we're never taught to listen to the source. We're never taught to listen to the chart in front of us. We're always taught to listen to some guy on TV, some guy in a chat room, some earnings report, some economic report, even some guy on a Saturday morning webinar. But our whole philosophy is, no, why would you listen to that when the answer is in the chart in front of you? Let's look at ILMN, all right? This is a little bit different because we are originally below. We're kind of bouncing up, and then we're kind of below again. We apply the top, bottom 25% bars. And once again, we have 4 different setups here. But we always tell our students, go with the majority. The majority tells you where it really wants to go. So even though we had 1 bar closing in the top 25%, the majority of these 3 closed in the bottom. And look what happened. The stock fell 35 points. Now, this is another perfect example of what I tried to share with you with edge number one, that you will have a higher level of consistency if you are in sync with the overall trend, edge number one. Now, sure, just like the slot machines in Las Vegas, you will have these small little jackpots that go against it every once in a while. But if you do that long enough, you'll give it all back. For example, a lot of beginning traders would say, but yeah, Steve, why wouldn't you buy here, get out here, buy here, get out here, buy here? So because you'd have to be very quick because most of those bounces lasted for a relatively short time. Wouldn't you rather use those bounces as a selling opportunity? Because just days and bars later, they were making lower lows. The same thing here, selling opportunity, lower lows. Same thing here, selling opportunity, lower lows. It's a lot simpler and you'll have a lot better sleepful nights if you are in sync with the overall trend as opposed to trying to fight it. All right, let's look at this chart in Moderna. This is coming into last month. Now, obviously, the overall trend was up because all the bars were closing above the 50-period moving average. Now, once we apply the top bottom 25 bars, we see that we had 3 bars that were either intersecting or very close to the 50-period moving average. So this was enough to tell us that Moderna wanted to go up beginning of May, and look what happened. By the end of May, just a couple of weeks ago, the stock was up 65 points from that initial technique setup right here. How about workday? Here's what most beginning students will say. They say, Steve, this is an uptrend. You know, that guy in that chat room says you got to buy it because this is classic technical analysis, higher highs, higher lows. This is going up. So why would I be selling a stock that's going up? Well, we don't know if we're going to sell it yet. We firstly have to apply the 50-period moving average. And we say, well, we're not selling at the market, but the overall trend is down because price is below. So this is a selling opportunity, but we need a confirmation. Now, once we apply the top bottom 25% edge, we see here that guess what? We have a bar closing in the bottom 25% and it is intersecting the 50-period moving average. So rather than maybe buy here or here and say, look, Steve, I've got a profit for the last week. Why would I want to sell? It would have been more conducive to being consistent, taking this sell signal, because look what happened the next week. Now, let's say you had bought here, going off that guy's recommendation in a chat room. How would you have felt when some news event happened and the stock gapped down 50, 55 points? And now you're holding on to a losing position and you have to hope and pray that it comes back. So that short-term trade you wanted to make now just turned into a long-term investment, right? This is why most traders fail. You're out of sync with the market. You're putting your trust in an outside source when you should just be learning to listen to the market because it tells you just about everything you want to know. Here's an example in KAI, okay? Once again, price is below the 50, but we have 2 bars intersecting the 50 that close in the top 25%. This is a high probability setup that a big move to the upside is about to appear. 85 points in the next month. Let's look at CRM, okay? This is Salesforce. If someone just looked initially at this stock and say, well, Steve, it's just kind of going sideways. There's nothing really to tell here. But remember, we are below the 50-period moving average. So even though it may be appearing to go sideways, the overall trend is down. So we should have a seller's bias. But if we apply this technique, we look for bars that close either in the top or bottom 25% to give us a better clue. And look what we have here, 1, 2, 3, 4 bars closing in the bottom 25%, and they're very close to or actually touching the 50-period moving average. So Salesforce, CRM, was not telling us it wanted to go lower. It was screaming, I want to go lower. And look what happened. In the next week, the stock fell 72 points. Once again, obviously some news event or something happened right here, which caused it to gap down. But isn't it funny how we knew a week in advance that the stock wanted to go lower? Why? Because we learned how to listen to the market as opposed to listen to some news report or some news event. Now, a lot of traders always look back in hindsight, and here's a chart of NVIDIA, and they say, hey, sure, this has been going up, but gosh, it's too late for me to get in now, and I would have liked to know way back here in advance to buy this. But how do you know? There's just no way to know. This is the common mistake that most traders make. They love to play the victim game and say, well, how would I know? Only the smart money knows. I don't have that much information. I have a small account. And so these guys are all, designed to steal and make tons of money, where the little guy like me has no chance. Well, first of all, you're not competing against anybody. There's no one you're competing against. You're just trying to learn how to be in sync with the market. So if you apply the 50 moving average, you would have seen here that, okay, well, we're initially below, but now we're intersecting, and we have 1, 2, 3, 4 bars right here where the market didn't really do much, but it was telling you the majority of them were closing in the top 25%. So that was your cue that this wanted to go higher. And look what happened. Towards the end of last month, it was up 275 points you could have taken advantage of. So once you know how to listen to the market using the simple edge right here, you no longer have to play that victim game and say, hey, well, the big money always makes tons of money and the little guy like me never does. You're not competing against the big money. That's one of the biggest urban myths. You're not competing against anyone. If there's only one person you're competing against, it's yourself. Learning to let go of this negative stuff that we've been taught and learning to be a consistent trader by listening to the market. Same thing to the downside. Let's say you were long this stock based off that maybe that brokerage announcement that they said they like this, and so you bought it down here thinking it was so low, right? They said it was oversold, and it continues to drag and go down lower. All right. This is why we never tell our students to listen to anyone else other than the market. Had you listened to the market, well, you would have known right here to get out, because it now was below the 50-period moving average, and you should only be looking to sell or out of the market completely. Now, if you were trading this edge, guess what? You had a setup right here. You had a bar intersecting the 50 and closing in the bottom 25%. Had you taken that as an exiting signal, in other words, if you didn't like to go short, but you just wanted to use it to get out of your current long, you could have saved yourself over 115 points. And once again, some news or something caused this to gap down from 250 all the way down here. But we would have known to get out well in advance. This is the advantage of learning how to listen to the market. All right, we can apply this to other markets and other time frames. I know I've just mainly focused on stocks. Let's look at a 4-hour chart of the Euro British pound. Now, it appears as if this is going lower, but maybe that guy in that trading room says, yeah, it's going lower, but you know what? The Euro British pound is extremely oversold. It's time to look to go long here. Right? This is why so many traders fail, because you say, well, this guy must know what he's talking about, so I'll just follow him. This is why we put the power in your hands. We teach you what to look for, and we teach you what to listen to so that you can make your own decisions. You'll never have to go to a chat room or a trading room. You'll never have to read a blog. You'll never have to wait and listen to news. You know, just off applying these simple edges, what to do. First thing is apply the 50-period moving average. Now, sure, originally on this 4-hour chart, price was above, but now we have 3 consecutive closes below. So now the market is telling us, not some guy in a chat room, the market is saying, I wouldn't really be so excited about buying. The overall trend is now down. And if we apply this technique, the top bottom 25%, we see we have 2 bars, one that intersected and one very close to that 50-period moving average that both closed in the bottom 25%. So now we have the overall trend and the short-term trend in sync, telling us that most likely there's a strong move to the downside. So you wouldn't have to listen to anyone in a chat room, because you could have potentially captured over 100 pips in the following days to follow. Okay, see how simple that is? That's roughly $1,000 per unit on a 4-hour chart. Now, what if we're an investor, or what if we're a swing trader? We like to look at weekly charts. Okay, let's go back about a little over a year and look at this weekly bar chart of Costco. Now, someone looking at this in hindsight would say, well, I wanted to invest in some stocks. I want to put them in my portfolio or my IRA, but I'm not really that interested in Costco. It's kind of just going sideways. And so it may be topping out. It may be doing this for maybe a number of months or maybe a number of years. I don't want to keep my money tied up. So I'm not going to do anything, because basically at this point, Costco looked as if it was in a range, right? So I'm going to wait for it to break out or give me a little bit more understanding. Maybe I'll wait for the earnings. Maybe I'll wait see what the economic reports that come out and say what the markets are going to do. All right. This is why most traders fail. We always wait for someone or something else to tell us what to do. When the market is telling you right now, you don't have to wait. First thing is apply the 50-period moving average. Okay, price was initially below, but now we have consecutive closes above. We only have one below, but the majority of these weeks, 1, 2, 3, 4, 5 weeks closed above. So for all intents and purposes, the bias is to the upside. But that's not enough. We can't just simply buy at the market. We need to confirm with the short-term edge. So we want to see if any bars close in the top, bottom, or 25% that are in sync or intersecting the 50-period moving average. And guess what? We click on the top, bottom, and look what happened. 1, 2, 3, 4, 5 weekly bars are closing and intersecting at the same time in the top 25%. So Costco on a weekly time frame, basically about a year ago, was not telling us it wanted to go higher. It was screaming, I want to go higher. Jump on board, follow me, let's make some money together. Unfortunately, we're never taught to listen to the market. We're taught to listen to some guy in a webinar on Saturdays, right? Listen to the market, because we all know what happened to Costco coming into this month. At the end of this month, the stock was up 320 points from where it was a year ago, okay? See how simple this is. When you get out of your own way, you will have that free open lane to consistency. Okay, let's recap what we taught you today in our special Saturday webinar. Remember the same thing my mentors taught me 47 years ago when I was struggling tremendously using the same things probably that most of you are using. Overthinking is what kills your trading. The market tells you everything you need to know. So if you have more than 10 indicators on your screen, if you're subscribed to tons of blogs or you're going to chat rooms and trading rooms, if you're waiting with bated breath for every earnings report to come out or some economic report, if you're waiting for the guys on TV to tell you what to buy or sell, you are overthinking. And basically, more importantly, you're taking yourself out of the game. You're letting someone else decide for you. Why not let the market tell you what it wants to do and then simply jump on board? You see, our job as a trader is simple. Firstly, our job is not to determine whether something is going to go higher or lower. It's not to determine how high or how low something's going to go or do. That's not our job. Our job is simply to listen to the market, find out what it wants to do, and then jump on board. That's it. We're not here to try and pick a top or a bottom. We're not here to try and estimate what the earnings are. We don't care. We're here to learn how to listen to the market and then simply jump on board. Now, I just gave you 2 edges and a technique based on these edges that you can see that could really turn your trading around, and you can start using them right away. You can start going back and doing your due diligence and research to see if they could help you. I'm sure after you go back and look at your last 10 or 20 trades, you see how they could have really helped you. Now, what if I could give you 5, 7, maybe a dozen more edges, okay? Ask yourself, if you think these 2 edges can help your trading for the remaining of 2024, how about 5, 7, or 12 more edges? Do you think they could help you as well? Completely different, based on entirely different information, but based on learning how to listen to the market. Well, I think your answer obviously is yes. So because of that, we have a great special offer for all of you attending and taking time out of your Saturday. This is our Secrets of a Stock Exchange Specialist video seminar. Now, some years ago, about 7 or 8 years ago, I was asked to be the head speaker at a trading conference in Colorado. And I spoke for roughly 3 hours where I talked about many more high probability trading edges to use. Totally different from the ones I just shared with you, okay? Now, I was lucky enough to have this presentation recorded, and that's what this seminar is. It's a full 3 hours where I talk about many more trading edges. Also, I go into the difference between a system and a strategy. And I also tell you which indicators not to use. I go into detail about the #1 shot pattern that you should be looking for in any strategy that you trade, how it means and how important it means to be on the right side of the markets, how you can apply these techniques and tips and tools and strategies to virtually any market in any time frame. But here's the best thing about this 3-hour seminar that is recorded. I will give away the complete rules to strategy #1. This is one of our most premier pullback methods that you get the complete rules to. Now, if you notice, the technique I shared with you didn't tell you exactly where to enter. It didn't tell you where to place your stop. It didn't tell you about money management or where to exit. Why? Because that's what a technique is. A technique is simply designed to highlight a high probability area. But a strategy is different in that It comes with complete rules. It tells you where to enter, where to exit, where to place your stop. And that's what you'll get on this 3-hour video seminar. Now, it's a pullback strategy. If you're not familiar with a pullback strategy is, let me share with you this chart here. Okay, a pullback strategy looks to identify the overall trend, which we have right here. Obviously, the overall trend is up. But with a pullback method, pullback systems and strategies are designed to buy at lower levels. So when the market sells off, everyone is thinking, well, that's it. The market is now going down. But a pullback method will try to buy at these opportune levels right here. Okay, so that's where you want to buy if you're a pullback trader. Let me show you how powerful strategy number one is. On our platform, once again, it's as simple as clicking on strategy one, and in the drop-down menu, you'll see signal alerts. Click on signals, and look at where the signals were generated. Right there, each and every one of those signals was a profitable trade. In fact, this very last one, look what happened in the next following days. Right back up, okay? So this is how powerful strategy number one is, and this can work to the downside as well. For example, here's an older chart of Biogen. Someone could look at this and say, well, Steve, we're kind of drifting sideways, but we have a bullish engulfing pattern here, so this is probably going to go up, right? The last 3 days have closed higher. But strategy number one is so sensitive, if you clicked it on, you would have seen that it generated a sell signal just based on that little 2-3 day bounce. And look what happened in the next 3 days or 4 days. It fell 25 points. Now, as we look at one more example in NVIDIA, this was going back to February, a couple of months ago. Now, sure, in hindsight, this stock had been going straight up. But at this point, it appeared to be having some trouble. A lot of traders could have said, well, Steve, this is major resistance. Once again, this is where all the banks, the big money is selling. So I'm going to sell my position. I'm going to get out. And you know what? I'm going to buy some puts because the guy in that chat room said it's going to come all the way down here, maybe even lower. And for the next couple of days, you feel good about yourself because it is going lower. But look at what strategy number one did. Where everyone else thought this had topped out, strategy number one generated a buy signal. So when you were short buying the puts based off what some guy said in a chat room, the market was telling you that this is getting ready to go back up. And the stock coming into March, the following month, was up 250 points. So you'll get the complete rules, entries, exits, stop placements, as well as money management to strategy number one in this Secrets of a Stock Exchange Specialist video seminar. 3 hours of trading techniques that I've accumulated over 47 years. But we're not going to stop there. Guess what? We're going to throw in a special bonus discount. Now, normally, this is costing close to $1,000 on the website, okay? That's a lot of money. We understand that, especially for a Saturday morning. You don't want to wake up and say, whoa, $1,000, that's it, I'm out. We're not going to charge you anywhere near. For a limited time, we're discounting this down to $37. Think of that, $37. Before you're going to leave this webinar and click off, okay, I'm exiting the Zoom page, $37. I would venture to say that you probably cannot go out to lunch by yourself for less than $37. But for that same amount, guess what? You are still getting over 47 years of high probability edges and things I've accumulated that have high levels of consistency. Think of it. You're learning the same things that have taken me 4 or 5 decades almost to accumulate. You're able to learn them and watch them in 3 hours. This is a fantastic, fantastic way to get your trading back on track. $37. I mean, you can't really do anything for less than $50 these days. But for $37, you can get almost 5 decades of information right there. And you can get it as early as the next hour. Here's how you take advantage of this. Now, one more thing. We're going to throw in an extra bonus. So many of the times we've given this presentation, students say, gosh, this is amazing. I want to buy something else, or I'm interested in another product you have. Well, guess what? If you sign up today and become a student of this secrets course, we're also going to throw in this extra bonus. Along with your purchase of this secrets course for $37, we will also include a 50% discount on any of the product we sell. So if we're selling something for $1,000, it's only going to be $500. If we're selling something for $500, it's only $250. If we're selling something for $100, it's only $50 more. That's it. This is a great, great discount, a great way to get back on track. So what have we shared with you today? I've given you a free trading edge. Didn't cost you anything using these 2 edges, learning how to listen to the market. You could start using that as early as Monday. We've given you a tremendous discount, going down from nearly $1,000 all the way down to $37. And lastly, another bonus. With any other product you'd like to purchase, you'll get it at 50% discount. This is our way of trying to become familiar with you and share with you, but mainly show you our devotion to making you a consistent trader and trying to educate you. So you owe it to yourself to take your trading to the next level. Invest in yourself. I know for so many times, so many students that come to us say, gosh, Steve, for the very first time, I'm a consistent trader. All these years, I look back, I was spending money on what somebody else was saying or on some system. I had no idea what it was based off of. But now I invested in myself. I'm starting to learn how to make my own decisions. And that's what makes you a consistent trader, okay? Here's how to take advantage of this great $37 deal, as well as 50% off to any other product we have. Contact my sister site, ProTrader Strategies. I would really highly recommend giving them a call at area code 310-598-6677. Now, that link you see on the very bottom is the link that will take you to the info page and the sign-up page. It's not a live link, but the good people at ProTrader Strategies have just posted the link on the chat page. So if you want to just click that on, you can just go open up the little chat icon there, and it will be there, and you can go and see any more information or sign up online if you'd like. But I would really recommend giving ProTrader Strategies a call because there's absolutely no obligation. If you have another question concerning data or concerning the platform or anything else that we offer, they would be happy to give you a quote. They would be happy to either give you more information or sign you up right over the phone, okay? But there's no obligation. They're there to work for you, and they're very flexible. So I promised you I would save the last portion of today's educational class for any questions. So I'm going to leave this information up here. You can copy the phone number, and remember, you can go to the chat box. But let me open up some of the question and answer, and just go to the chat box and to ask a question, or go to the question and answer box. Someone's asking, Steven, does it matter what time frame? Great question. No, absolutely does not matter. I like to use this technique, and I also like to use the other things that we have on our platform, and we also have in our courses for intraday trading, because that's my background. You know, when I was trading on the floor, I would be in and out of trades in maybe 2 minutes. So that's what I'm used to. So I'm an intraday trader. Also, it fits with my schedule. A lot of times I'm doing webinars, or I'm doing courses or mentoring. I don't have time to be in a longer position, so I like to intraday day trade before I have to do something. So yes, you can apply to that. We have students that trade weekly and in monthly bars, and they use these techniques and methods. It makes absolutely no difference what time frame, makes no difference what market, okay? Will this work on any platforms? Well, when you say, will this work, are you talking about the technique I shared with you? Because the technique, yeah, I mean, you won't have the ease of access of clicking on, the top bottom 25% the way we have on our platform. But sure, but you'll have to do, unfortunately, you'll have to do the hard work yourself. In other words, you'll have to divide that bar and see and go, okay, is it closing the top or bottom 25%? If I'm intraday trading, that can get a little difficult. But on our platform, it's just one click and you'll see it right there. So yes, you can apply this to any other platform. And yes, platforms like TradeStation or Thinkorswim, sure. And we have in our strategies that are methods that I didn't talk about today, but we have trading strategies, we have trading techniques, and we have trend following methods. You can apply them to TradeStation, Thinkorswim, Metastock, NinjaTrader, Sierra Charts, just about all of the major platforms. But I would contact ProTrader Strategies to ask them. They're in charge of all the data, all the tech support, and they can answer those questions a lot better than I can, okay? But yeah, it doesn't matter, because these are all things that you'll see on any chart. It makes absolutely no difference, okay? Let me see if there's another question here. Let me open up the chat box. Is it compatible with MT4 and MT5? Yes, it is. It is. And once again, it doesn't matter, because you can apply these to any time frame, any market, and it works on, as I said, the major platforms, okay? Let me see if there's another question. Someone's asking, what if I have trouble understanding the information in the course? Well, here's one thing I didn't mention. With every one of my courses, along with this one, the Secrets course, you get my private and personal email address. So everyone can contact me whenever they like. Many students contact me over the weekends. For example, this morning prior to this presentation, I was answering emails from our students around the world. We have students in Europe, we have students in Canada, we have students in Mexico. So we're dealing with a lot of different time zones and hours. So you can email me prior to the opening, after the close, during the market, trading hours, or on the weekends, and I will get back to you as soon as possible, okay? So anytime you have a question, you want me to check your work, you say, hey, Steve, I'm studying these edges and techniques. Did I do this correctly? Sure, I would be happy to get back to you and check your work. So it's the next best thing to me sitting there right next to you, okay? Good questions. Any more questions? Remember, this offer is for pretty much a limited time, this $37 offer. So you really, if you're interested, take advantage of it. And it's not like we're saying this is a great discount down to $500, 50% discount. No, we're going down to $37. I mean, if you go out to breakfast with your significant other or a friend, it's going to cost you more than $50, maybe $60. It doesn't matter where you go. So for $37, you're getting nearly 5 decades of information I've accumulated over the years. Okay, so it's tremendous information. It can really help you for such an inexpensive price. And on top of that, you're getting that 50% discount on anything else we have. Okay, so what a lot of our students do when we've given this presentation in the past, they've watched the video, they've taken the course. After it, they've watched the 3-hour and they said, wow, this is amazing. I'd like to maybe get one of your strategies. Well, guess what? It's 50% off. We don't give this offer for a lot of our presentations. So this is a great way to become familiar with us. And as I said, probably the best thing is to contact ProTrader Strategies. Now, a lot of people say, well, does this come with a scanner? Yes, it does. It comes with a scanner. Many of our techniques and methods come with scanners. And so you can just scan for stocks that are above or below the 50-period moving average. You can scan for these top bottom 25% bars. We make it simple. We really make it simple because trust me, when I learned this 47 years ago, I didn't have that capability. Everything I did was by using a hand calculator and by using paper charts. But now we've made it really simple for you. But the beautiful thing about it is we are still teaching you. These are not black boxes. We're teaching you everything. We just made it simple for you to check your work. Okay, so you will understand everything that comes with it. Remember, if you have questions about the platform, if you have questions about data, about markets, contact ProTrader Strategies. They're in charge of all that information. They can answer these questions really easily. Just give them a call with the number right there, 310-598-6677. There's absolutely no obligation. They're there to work with you. They're there to give you information. They can give you a quote if you're interested in a strategy with a 50% off. And they're very knowledgeable about all of those things in terms of the platform, tech support, and data, okay? Also, they will tell you about any of the other discounts that we have or any of the other information we have as well, okay? Okay, so we've come to the end of the presentation with this special Saturday. We do this every once in a while because we want to really show you in good faith that we want to give you something for free to show you that, listen, if you can see this for free and see how powerful it is, just think of how our other methods and our other techniques can really help you. So experiment with what I taught you today. Please paper trade first. And once I'm sure you're convinced that how powerful it is, call ProTrader Strategies right away. Get that $37 offer before its limited time offer ends, and see how powerful you can be with that 50% discount as well, okay? Now, as I take one last look at our discount page here, I should say disclaimer page, I just want to say thank you so much for taking time out of your Saturday morning. I know you learned something different than you've probably learned before, but go back and research it. I'm sure you'll be saying, boy, this can really help me in the future. So come on board, and I look really forward to having you as all of my students in the Secrets course. Thank you so much. Have a great weekend, and hope to see you in class. Bye-bye.